everybody, and welcome to our interview series. Now, in today's video, we're going to be talking about the recently launched Tata Housing Opportunities Fund. Tata Mutual Fund's new NFO opened up on 16th of August and is going to be closing on 29th of August. So, without further ado, let me introduce today's guest, Mr. Tejas Gutka, the Fund Manager for Tata Housing Opportunities Fund. Welcome to the series.
Thank you so much for having me here. It's a pleasure.
Thanks a lot. Now, Tejas, can you start by telling us about your new fund offering and how is it different from your peers?
Sure. So we're coming up with a thematic offering that we're calling the Tata Housing Opportunities Fund. The idea is to invest in a set of companies that belong to industries that provide materials, services, and products to an entire house, right? So think about all the things that we interact with when we buy a house. I think you'll find all of those industries in this fund, and it's the idea is to play the housing cycle. We think after a very, very long time, the real estate sector is looking up, and therefore this is an attempt to participate in that upcycle of the sector. You said how are you different from our peers? I think the idea behind this fund is slightly different from the way what exists in the market. We're trying to build something very bottom up. We're trying to build something that is very true to its theme. If you look at the current offerings in this theme, or if you look at the underlying benchmark of this theme, you'll find a lot of overlap between infra and housing. We are trying to be true to the housing theme. We don't want to invest in infra or value-oriented sectors, and to that extent, we'll have a portfolio that'll look very different from what exists in the market.
All right. Now that you mentioned infra and housing, what is the difference between an infra fund and a housing fund?
So, the simplest way to differentiate between the two is to think of infra as everything where the government spends capital expenditure on, right? This is roads, ports, airports, and so on and so forth. Housing is something that you and me as individuals spend capital expenditure on, right? This includes a lot of building materials, a lot of real estate developers, some housing finance companies, and so on and so forth. So, right, when you think of a house, right, from the cement and steel that goes into the walls that make the house, to the wires and cables, the appliances, the tiles, the plumbing pipes, all of that together is what we're calling the housing portfolio.
Got it. All right. Now, what are the sectors and the subsectors in which this fund is going to invest?
Sure. So I mentioned some. I think if you look at it in the order of our interactions, right? We typically, when we are buying a house, we first interact with the real estate developer to buy a piece of land or an apartment from the real estate developer. We'll go to a bank or a housing finance company to get this this apartment or piece of land financed. So that's two industries. The walls or the structures made out of cement and steel. And then you'll have your tiles on your floor, cables and wires running through your walls, lights and fans on your ceilings, air conditioners. Your bathroom has plastic plumbing pipes. You'll have tiles on your walls. You'll have, bathware or sanitary ware in your bathroom, from your wash basin to your WC. You will have furniture which is made out of ply and laminate. So all of these, there are about 12 odd industries that we've looked at. I think all of these together will form our portfolio.
Got it. Okay. Now, in the housing space, are allied sectors expected to be more stable compared to pure play real estate companies?
Yes, absolutely. I mean, look at the real estate cycle, right? We've had a good real estate cycle from, I think, 2003 onwards till about 10-11. Then we've had a down cycle from 2012-13 to about 2020. And we think the upcycle is starting now. But, the cycles have been extreme. We've had very strong growth between 2003 to 8. We've had very strong degrowth between 13 and 20, especially in the 16 to 19 period. The numbers look very poor. And therefore, as an investor, you kind of had capital compounding cycles and capital destruction cycles. When you look at most of the building material categories, all of these have done well in the last 10 years, even when the real estate sector has not done well. This is because, there's an inherent replacement demand here. You and I will buy a house probably once or twice in our life, but we redo our house every 5, 8, 10 years, right? And therefore, there is an inherent downside support to the demand here. So the building material sectors typically go from a fast growth cycle to a slow growth cycle. There is no growth and degrowth cycle here. So there is upside participation here as well as a downside protection here, even in a slow market.
Okay. Now, in terms of market cap, what is going to be the size of companies in which this fund will invest?
So we are well spread across market caps. We think we'll be about 50-60% large caps in our portfolio, and the rest of it will be mid and small caps in our portfolio. So we had a good multi-cap flavor in the portfolio. When you look at the benchmark, which is the Nifty Housing Opportunities Index, this is a almost 90% large cap, 10-11% mid cap, 0.5% small cap allocation as of today. Given that a lot of the offerings are benchmarked here, I think you'll find them also large cap oriented, whereas our fund will give you a more multi-capish flavor in this segment.
Okay, and what is going to be the investment style?
So as a house, we believe in the growth at a reasonable price, or the GARP philosophy. We are largely a very bottom-up house, and we'll see a reflection of both these styles here. Like I said, we're going away from the benchmark. We don't think we'll replicate the benchmark in our fund. So you'll get a good bottom-up portfolio. The GARP philosophy that's reflected across all our portfolios, we'll see here. Just on some rough number basis that we've looked at, I think the portfolio P is about 25 odd, which is very close to where the market is. So you're getting a very high growth, high quality portfolio, but at a very, very reasonable price. So you see that reflected here.
All right. Now, what are some of the measures the fund will look at for basic filtration from this universe?
So we have three criteria typically when we look at a stock, right? Three very, very broad criteria. We want reasonable growth, we want good quality, and we want reasonable valuations. These are the three broad filters that we use for all our filtering. And I think you will see that filter in through here. Largely, like I said, the sector is a high quality sector here. Most of the sub industries are pretty high quality consumer facing businesses. And so one of the filters is already taken care of. And then we'll use the other two filters, which is, a mix of growth and valuations, to determine which stocks come into the portfolio and which stay out.
All right. And what is the suggested investment horizon for this?
Being an equity product, I think a minimum of 3 to 5 year investment horizon is what we are suggesting investors to come in with. Like I said, we've tried to take out the cyclicality of this portfolio. You could think of investing in this portfolio for a 10-15 year horizon as well. When we talk about India as an investment horizon, we always talk about the domestic consumption story. India has never been a manufacturing hub or an export house. Right? We've always been a domestic consumption story. And when you look at some of the smaller segments of this domestic consumption story, some of the small but high growing segments all feature in this portfolio. And therefore this fits in, into that structural India consumption story portion. And therefore you could look at this as a more structural offering. So while we're coming in a thematic category, I think we've created a portfolio that's got a more structural flavor. And therefore you could look at a 10-15 year investment horizon in this portfolio as well.
Got it. All right. Now, one final question before we close this session. How is this fund different from a consumer fund?
Oh, it's quite different. You see, when you talk of consumer fund, some of the large sectors that feature in a consumer fund, which is FMCG, auto, retailing, apparel, footwear, all of these are not part of this fund. What you'll see in this fund will probably feature in the tail of a consumer fund. So the overlap will be very small, maybe 30-40% at best. And therefore, to that extent, this is a very unique offering, even when you look at other sector or thematic funds.
Got it. All right. Tejas, thanks a lot for joining in. It was a pleasure to have you. We do wish you all the very best. Thank you so much.
Thank you. The pleasure is mine.
Brokerage shall not exceed SEBI specified limit. Investment in securities market are subject to market risk. Read all the related documents carefully before investing.